An update on a story we reported earlier this week. We told you about some economic indicators you might not be aware of, but they're closely watched by the Federal Reserve. Well, today, we know what those reports say. And now, just days away from the Fed's next policy meeting on interest rates and its monetary easing policies, Steve Liesman takes a look at exactly what those central bankers are looking at in that data.
A new labor market indicator from the Kansas City Fed shows strength in the nation's job market, but a long way to go until it can be considered healthy. And yet it could mean somewhat faster Fed rate hikes than Wall Street now anticipates. The Labor Market Conditions Index, which Fed Chair Janet Yellen said she is now following, brings together 24 separate indicators into a single place. It rose 0.08 in August to minus 0.52. That's a new post-recession high, but it's still below the worst levels of the 2001 recession and still below average. But the momentum indicator suggests good job growth in the months ahead.
If the pace of improvement continues at the rate that it's been since, say, QE3 started, I would estimate we would hit the zero marker or the average level of conditions next March. And historically, the Fed has started to move rates higher at roughly around that time.
Meanwhile, it looks like second quarter growth, already reported to be strong, is even better than first thought. A relatively new government survey that measures the big U.S. service sector shows healthcare spending was much healthier than first estimated. In fact, it surged along with better business investment. The result, growth in the overall economy in the second quarter now looks to be running somewhere around 4.7%, a half point better than originally reported, and maybe the best growth quarter since 2005. It's certainly a big snapback from the weather-related negative number in the first quarter. It's unclear if the strength will motivate Wall Street to upgrade their view on the third quarter, which is running a pretty healthy 3.1%. One more piece of data this week. Watch for an important read on consumer spending at 8:30 a.m. with the August retail sales report. For Nightly Business Report, I'm Steve Liesman.